Hey guys, welcome back to my YouTube channel. In today's video I want to talk about something that everybody keeps asking me about, which is ROI. So, ROI in relation to an automated trading system. What is it? And what do you need to look out for when you're trying to find out the actual real ROI of a system? That's what we're going to be talking about in today's video. If you're new to this channel, welcome to the #1 place to be if you're really looking to learn more about automated trading and the world of online business. So, make sure that you hit that like button and subscribe. So, the first thing you need to understand is that ROI, it means different things to different people, especially when you're talking about automated trading, because automated trading is very new. People don't really know exactly how to judge the performance of these systems, and they end up making a lot of mistakes when they're trying to find out the actual ROI. ROI simply stands for return on investment. It's basically the amount of money that you have made from an investment relative to the amount of money that you put into it. For example, if you put $1,000 into a particular investment and you make $100 in profit, then your ROI on that investment would be 10%. That's simply because $100 divided by $1,000 gives you 10%. So, in the context of automated trading, the ROI is influenced by 4 things. It's the strategy performance, which means like the win rate and the risk-reward ratio. It's the broker conditions, which is things like spreads, commissions, and slippage. It's also influenced by the amount of capital that you allocate, which is the total size of your account. And then finally, it's a time frame that you choose to measure the ROI. A lot of people that are trying to find out the ROI of a particular system, they end up making a lot of mistakes. They don't even understand what they're looking at. For example, a lot of people, when they're looking at an EA or an automated trading system, they just look at the net profit. So some of these EAAs, they show you the net profit, and it looks really great, but they don't tell you how much the drawdown was. So in order for you to actually calculate the real ROI, you have to take into consideration a lot of factors. You have to consider the maximum drawdown, the recovery factor, and all of those things. You also need to look at the time frame. So a lot of people, they look at the monthly ROI, but you also have to look at the annual. So when you're looking at an automated trading system, the first thing that you need to ask is, what is the maximum drawdown on this system? If I invest this money and this is the total amount of money that I am going to be risking, what is the worst case scenario? Because you need to understand that when you're trading, you are always risking money. Even if someone says that it has a 100% winning system, or it has a 100% win rate, it doesn't mean that you're not going to have drawdowns. Drawdowns are normal in trading. You just need to understand that. So the second thing you need to look at is, how quickly does this system recover from the drawdown? What is the recovery factor? And the last thing you need to look at is the fees, because some of these EAS and some of these automated trading systems, they do tell you the fees that they charge. Some of them, they charge a flat fee. Some of them, they take a percentage of your profit. Some of them, they have hidden fees. So you need to look at all of these things when you're calculating the ROI. And then finally, you need to look at the time frame. So do you want to be looking at a system and seeing that it has a 10% return in the last 2 weeks and think that this is the best system ever? You need to understand that markets, they change all the time. So a system that might work in a trending market might not work in an trending market. So I personally believe that in order for you to actually judge the performance of a system, you need to look at least 3 to 6 months. And also, you need to remember that backtesting is completely different to forward testing. So a lot of people, they see the backtest results and they think that this is the performance that they were going to get when they start using the system. But backtesting is completely different to forward testing, because the markets, they change all the time. So you need to look at the forward test results. I hope that helps. Let me know what you guys think in the comments below. And remember, if you haven't already subscribed to this channel, please go ahead and subscribe, because there are loads of other videos coming up that will help you on your journey to financial freedom. Thank you for watching. See you in the next video.